Regular Insight viewers recognize her right away as a valuable resource in planning and sustaining your retirement. She's Heather Foster, investment advisor and fiduciary. Today we want to talk about life insurance. It's not just for the people when you
leave behind.
Yeah, this is something I don't necessarily want to talk about. It's not just for my kids when I move on, but
yeah. Well, I've had 9 clients pass away in the last year, so this has been a topic of conversation coming across. So it's just something that I wanted to address. Life insurance can be used for a lot of different reasons, though, as to your point. It's not always for those that you leave behind. Actually, you can use life insurance as an investment vehicle. Where you overfund whole life policies, you borrow the cash value, especially for people who don't have a way of maybe building Roth money. They phase out because their income's high. So you can utilize it for that. But what I really wanted to talk about was actually the life insurance for those that you leave behind. Specifically your spouse or a significant other. We do a lot of planning, and I think a lot of people buy like a term policy from their insurance guy. Their home and auto person sells them a small term policy. It usually is a portion of an income replacement, and a lot of people go, hey, if my spouse passed away, I need 5 years of their income to be replaced, and then I could figure it out on my own. But life for most people, it's a lot longer than 5 years, 10 years, 15, 20, and 30 years. So life insurance is one of those things that you need to pay attention to as far as how much do you need, or do you even need any at all? And that really, at a lot of times, unless somebody knows your whole entire picture, AKA a financial planner who knows all of the sources of income you're going to have coming in, retirement income, investments, all those different things, how you're saving your money. How can somebody blindly give advice as far as how much life insurance you need if we don't know all those other factors? So I think it's important that people take a look at actually, one, do I even need life insurance? You'd be surprised, a lot of people, one spouse needs life insurance, the other one doesn't. It's not an equal thing. A lot of people go, again, well, my spouse, I would want to make sure got the same amount that I did. But if one person has, let's say, a pension that they didn't take a survivor benefit on, and the other person does not, again, that person's income replacement need isn't nearly as high as the person who's going to lose not only a Social Security income, but a pension income as well. So I think it's important that we actually look at life insurance from the perspective of, all right, I've got someone I'm leaving behind that depends on my income. How do we replace that? The other option, of course, is to tell the other person, hey, you could also just live on a lot less money. Therefore, maybe there's not a life insurance need. That doesn't usually fare too well. Usually there's a small reduction of income need when somebody passes away. But honestly, your baseline needs don't really change a whole lot.
Your mortgage doesn't change.
Your car payments don't change.
Exactly right.
Your electricity bill doesn't change, really. I mean, no one is having an extra person there. The food, maybe, right?
But not much.
But honestly, again, if you lost your loved one, you may not even be cooking at home. Now you may be going out to eat a lot more because it's hard when you're alone to just be cooking by yourself. So the spending habits of somebody that loses a loved one, actually, normally they don't go down. If anything, I see them a lot of times increase because they're filling voids or spending more time with family and friends to fill that void, therefore going out more, eating out more, things like that. So I think it's just important when we look at life insurance. There are a lot of different kinds of life insurance. Term policies, remember, are for temporary needs. A lot of times we look at laddering, those kind of things. So maybe there's a higher need if somebody passed away right now than there is in 10 years or in 20 years because we have had another 10 years of them saving money into their retirement programs. Therefore, they have a larger lump sum of money that the other one that they leave behind can live off of. So laddering life insurance, higher needs earlier, then maybe they go down. Those would be term policies normally that we're looking at, so it's a temporary thing. Permanent policies are going to be for the amount of money that is permanent in nature. Again, you might say, well, right now if my spouse passed away, I need $500,000 to make sure I can live the rest of my life, but in 20 years, I only need $100,000. But I would always need $100,000 because I'm going to lose a Social Security income or a pension income. So that's more of the permanent ones in nature. Again, you can also utilize life insurance for investment purposes, growing and borrowing that cash value. So there's a lot of uses for it, but the one I really wanted to focus on was more of that income replacement. Again, if you don't have a plan in place and you've not saved up enough investment assets for your spouse to drain that instead, then you need life insurance, and it's something that you actually have to look at from a planning perspective on what you actually need.
There's so much that goes into it, and I think that's one more reason you need to talk to somebody like Heather Foster about it. Give them a call today, 234-2200. We'll be right back.